Hi everyone, I'm attorney Aiden Durham with 180 Law Co. in Denver, Colorado, and you're watching All Up in Your Business. On this episode of All Up in Your Business, we're going to talk about tax deductions that your small business definitely doesn't want to miss in 2020. And when I talk about in 2020, I'm talking about filing taxes in 2020 for 2019. First, I'm going to give you some deductions that you want to take advantage of this year. But then I'm going to talk about a few deductions that you can use in planning for next year and how to minimize your taxes for next year. But before we get into it, please be sure to like, subscribe, and share, s'il vous plaît. And check the description for some additional information. And I've got some freebie downloads and check sheets and stuff there too. All right, taxes. First, a little bit of background information. You can kind of, but not technically, deduct pretty much all costs associated with running your business. Now, obviously, there are rules and exclusions to all of this and exactly how it works, but ultimately, you're able to recover in one way or another the costs that you spend in your business. Now, technically speaking, some costs can be deducted, but some, which are considered capital expenses, have to be capitalized rather than deducted, which just means they have to be amortized or depreciated. Amortized means you deduct it over the series of a few years. So instead of taking a $10,000 deduction, you take a $2,000 deduction over 5 years, amortizing that deduction. And then depreciation is kind of the opposite. You get to deduct the loss in that asset over the period of a certain amount of years. So I'll be using the term deduct or deduction throughout this video, but sometimes in some circumstances, it's not actually a deduction. It's a capital expense, which needs to be capitalized. So what can be deducted from your business? The kind of general rule, the general rule of thumb is that you can deduct anything that is ordinary and necessary for your business. Now, if something is ordinary, the IRS says that that means it's common and accepted in your industry. And if it's necessary, the IRS says that that's helpful and appropriate. So for the most part, if something is ordinary and necessary, you can deduct the cost from your business. For this year, for preparing your taxes for 2019, here are some really important tax deductions that you do not want to miss. First off, you can deduct the costs of going into business. The IRS allows you to deduct your startup costs and your organizational costs. So startup costs are things like buying supplies, market research, advertising, travel that's needed, any ordinary and necessary expenses that are incurred once you're in the process of starting your business. And then organizational costs are going to be like filing fees and professional fees like legal and accounting costs. You can even deduct your startup costs if your business is unsuccessful. So even if you tried to start a business and it didn't work out, you didn't make any income from it, you can still take a deduction for the costs that you put into trying to start that business. Usually, there are a couple of rules. So the IRS says if you incurred those costs prior to making a decision to go into business or to start a business, then those are personal expenses and you can't deduct them. But any costs in your attempt to go into business, once you made that decision to pursue going into business, all of those costs are capital expenses and can be amortized. So this is one of those situations where it's not a deduction exactly, it's a capital expense. But the IRS does allow you to deduct $5,000 of startup and organizational costs each. So $5,000 each. So if you spent more than that in your organizational and startup costs, then that's a situation where you'd want to amortize those expenses over a few years to take full advantage of those deductions. Next, you can deduct the cost of your supplies and materials and just kind of general overhead and operating expenses. So this will be your office supplies and incidental materials, just random things you need in your office to operate your business. It also includes like services and subscriptions, apps that you need for your business. So if you download some app that you have to use every day, or if you use some subscription services to operate your business, those are all deductible. Next, you can deduct your costs for employees and contractors. Payroll expenses are fully deductible, as are any kind of contractor expenses. So if you have anyone on your team who's helping you out, supporting your business, those costs are deductible too. Equipment, computers, any kind of machines, printers, scanners, those expenses are all deductible. Many instances they have to be depreciated depending on the type of equipment or the type of thing it is, but in one way or another, those expenses can be recovered. Of course, you can deduct the cost of your rent if you rent an office, or if you even rent a PO box, or if you have a virtual office that you use for your mailing address, those costs are fully deductible too. Utilities and other services like that, those are all deductible. This applies if you have an office outside of your home, if you pay water or electricity or any other utilities, your internet bill, your phone bill for that office, those are all going to be deductible business expenses. If you're making any retirement plan contributions as a solo business owner, if you have a SEP IRA or a simple IRA, or if it's just you have no employees or anything, and you have a solo 401k, you can make tax deductible contributions to your retirement account. And the nice thing with deducting these retirement contributions is you can make a deduction up to the day that you file your taxes. So you don't have a deduction just for the contributions you made in the previous year. You can take for that year a deduction for any contribution that you made up to the date of your filing. One of my favorite deductible expenses is travel expenses. If you travel for work, if you travel for conferences or meetings or to sites or to work with clients, those travel costs and travel expenses are going to be deductible. This applies even if you use some personal time for that travel, which is what I love to do. If I have to go to a new city or go somewhere new for a work event, I try to tack on a day or two to that trip so I can have some personal time and travel and sightsee and have some fun for myself. Now, if you do that, unfortunately, you can't deduct the full cost of the trip if some of it is personal. But so basically, you just deduct the portion of the trip that was work related. So if you're gone for 10 days and 5 of those days you spent in a conference, 5 of the days you spent doing personal stuff, then 50% of your travel costs and travel expenses can be deducted. That includes your travel meals. Now, meals, there is a limit to what we can deduct, whether it's a meal for traveling or a meal if you're taking a colleague or a client out to lunch. Any of those kind of marketing or entertainment meals, those can be deducted up to 50% of the cost of that meal. So you can't fully deduct the entire thing, but 50% of those expenses are deductible too. Insurance costs are deductible as well. So your liability insurance, if you have errors and omissions insurance, product liability insurance, even your health insurance premiums can be a business deduction. Mileage is a big deduction that a lot of people can easily miss. The mileage reimbursement rate for 2019 is 58 cents per mile. So that means for any business related mileage, you can take a deduction for 58 cents per mile. Now, if you do this, you want to be really careful that you're tracking your mileage properly, because you can't take a deduction for all of your miles. It's only the ones that are business related. So driving from your office to a meeting, or driving between meeting locations, or driving from your office to a client's location. All of that's business mileage. Now, you can't usually deduct the cost of mileage between your home and your office, but there is a little trick to getting around that. And that is with a home office. So if you do have a home-based office, if you work in your home, or if you work in your home and you have an outside office, but you do a lot of work in your home, you may be able to qualify for a home-based office and take home office tax deductions. Now, the deductions that you can take for an office in the home are really the same as the deductions that you can take if you have an outside traditional office. It's just going to be not necessarily all of the expenses. So with your home office, you can take a proportion or a percentage of those costs depending on how much of the total home your office takes up. So for simplicity's sake, let's say your home, the total square footage is 1,000 square feet, and your office takes up 100 square feet of that total footage. That means 10% of your home expenses can be deducted as business expenses. So that includes your mortgage interest or your rent on your home insurance, your home utilities, electricity, internet costs. It can also apply to your cell phone bill. Even if you don't have a home office, if you use your cell phone for 50% of the time it's business, then 50% of your cell phone bill is a business expense. But going back with the home office thing and mileage, if you have an office in your home and an outside office, then now because your home is an office location, that mileage between your home office and your other office can be deductible business mileage, because it's now driving between offices rather than driving from your home to your office. Advertising costs, of course, are a deductible business expense, whether it's Google ads or advertising for a billboard or to put a commercial on TV. Your advertising costs are going to be deductible too. Any expenses to attend conferences or meetings, so of course your travel costs are included, but the ticket price to attend that, if you had to pay something for it, that's going to be deductible as well. Credit card processing fees. Thankfully, if you accept payment over credit card, we have a lot of fees that we have to pay to take those credit card payments. Those fees that we pay are going to be deductible, at least a little bit, to help offset how that affects our actual income. Educational costs can be deductible too. Not in all circumstances. You can't just go back to school to get your bachelor's degree and have your business pay for it. But you are allowed to deduct your educational costs if the education is to maintain or improve your current work skills, or if you're required to complete that education. So if you're in an industry like the legal profession or accounting profession where you have continuing education requirements, those costs for attending those courses are going to be deductible. Your tax prep services, those costs are deductible too. So isn't that funny? The cost that we put into preparing our taxes to figure out the deductions, that money that we put in to figure out what we can deduct, that money is deductible itself. Isn't that funny? Ha! And then finally, any kind of licensing or regulatory fees. So again, if you're in an industry like the legal profession, or if you're a cosmetologist or something where you're licensed or governed by some licensing board, then those fees and any renewals, those are all going to be deductible for your business. So those are some costs that you can take advantage of this year when you're filing your taxes for last year. But looking forward, let's say maybe 2019, if your taxes were a little bit higher than you're liking, there are things that we can do this year to plan for next year and hopefully try to minimize our taxes for next year. The first one is start tracking your mileage now. If you haven't already, if you're not already taking advantage of that mileage deduction, start tracking it now. My favorite thing to do, there's an app called Mile IQ. There's a free version or a paid version. It's fantastic. I've used it for 5 years, if not more. You just download the app, put in your starting mileage, and then it automatically tracks you. When it senses that you're moving in a car, it tracks your mileage, and then you can categorize it as personal or business related, and then it automatically calculates the deduction or the reimbursement rate for those miles. So if you're not doing it already, start that now so you can deduct your mileage next year. Another way to plan for next year's taxes, start contributing to an HSA or a health savings account. If you're on a high deductible healthcare plan, you can contribute money to your HSA, and those contributions will be tax deductible. If you know that you have regular medical costs, if you have a regular prescription that you get every week or every month, you can factor that into your costs for the year and plan out how much you should put into your HSA for next year. And if you're starting to get really busy and maybe you're starting to make a lot of money, hire someone, hire some help. That's going to take some weight off of you, and it's going to give you an expense that you can deduct from your income next year. You can also potentially limit your taxes by making an S corp election. Now's a good time to talk with your CPA or your tax advisor to determine if making an S corp tax election will help you save for next year. And then if you're a big time baller and you're getting into a higher tax bracket, if you're starting to make a lot more money and you're going into that higher tax bracket, talk with your tax planner about what you can increase, what expenses you can increase, or what contributions you can make more of to lower your income so you're in a lower tax bracket. That's all for this episode, folks. Drop a comment below and let me know what you think. Also, be sure to check out my blog for some more information and to learn more about small business tax deductions. Thank you all so much for watching. I'm Aiden Durham, and I'll see you next time.